Good evening. This is the post-market recap by AGI Era. Today is Wednesday, January 21st, 2026, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a battle between bulls and bears, with the bulls ultimately gaining ground, but not without some underlying concerns. The S&P 500 finished the day up 1.16%, settling at 6875.62. Technically, the index is now trading firmly above the psychological 6,800 level, showing resilience, but still below its recent highs. The Nasdaq 100 also saw a strong day, closing 1.36% higher at 25,326.58. The Dow Jones Industrial Average finished higher by 588.64 points, a gain of 1.21%, closing at 4977.23. Crucially, trading volume today for the S&P 500 was significantly lighter than average, coming in at approximately 2.7 billion shares compared to an average of over 5 billion. This implies that while the indices moved higher, this upward momentum may lack strong long-term conviction from institutional players, suggesting a more cautious or rotational buying rather than broad-based enthusiasm. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, was not available in our data feed today, but the overall market action suggests a controlled environment rather than panic. We are seeing a clear divergence in sector performance. Money flowed noticeably into technology XLK, which gained a robust 1.41%, while utilities XLU, often considered a defensive play, saw a more modest gain of 0.16%. The spread between these two sectors today tells us that investors are favoring growth and risk on assets, albeit with the caveat of lighter volume. This indicates that Wall Street is positioning for continued, albeit perhaps selective, growth, rather than a broad flight to safety. The primary driver of today's moves can be traced back to the bond market, though specific 10-year Treasury yield data was not available in our Stook feed. However, the U.S. dollar index DX.F is higher, settling at 98.58, a modest increase of 0.14%. This slight strengthening of the dollar, despite some geopolitical noise, suggests a persistent underlying demand for the greenback. Meanwhile, crude oil CL.F is trading around $60.68, up 0.53% on the day. This uptick in oil prices is responding to a generally positive sentiment in global markets and potentially some supply-side considerations, though no specific news catalyst was immediately apparent in our narrative feed. The AI and Tech Monitor. Turning to the leaders of this market, artificial intelligence and big tech. Nvidia finished the day up 2.87% at $183.08, continuing its strong run. However, Microsoft closed significantly lower by 2.29%, settling at $444.11. This weakness is notable. Apple closed marginally higher by 0.38%. Other significant movers among the Magnificent Seven include Alphabet, Google, which gained 1.98% to $38.28, and TSL, which surged 2.922% to 4. Meta, Meet, also saw a solid gain of 1.48%. The weakness in Microsoft today is particularly notable and warrants a deep dive. Our research indicates that investors are reacting to several concerns: skyrocketing capital expenditures for AI data centers, fears about higher future operating costs due to new government commitments on energy, and a broader tech sector rotation. Furthermore, CEO Satya Nadella's recent warning that AI could lose public support without continued progress has added to investor jitters. This suggests that even the most dominant tech players are not immune to scrutiny regarding their long-term AI investment strategies and their immediate impact on the bottom line. After hours and look ahead. Looking at the after-hours tape right now, shares of Netflix are moving significantly, down nearly 5% after hours. While specific news is still developing, this could indicate a reaction to analyst notes or early whispers ahead of potential earnings. We also see slight after-hours gains for Apple and Nvidia, suggesting some continued positive sentiment for these names. As we pivot to tomorrow, the economic calendar brings us a critical data point: the U.S. pending home sales slump to a 5-month low in December, falling well below forecasted figures. This is a significant indicator of the health of the housing market and broader consumer confidence. Investors should specifically watch how this data point influences interest rate expectations and sectors sensitive to housing, such as financials and consumer discretionary. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.